Hello, everyone, and welcome to another one-to-one Mining Investment APAC online content session. Today, to speak on decarbonization in the industry, we have Felix, Head of Energy and Materials Research at CCB International Securities, and Peter Kiernan, Lead Analyst for Energy at the Economist Intelligence Unit. And so I guess to kick things off, it's great to be important to talk about the impact that COVID-19 has had so far on climate discussions, energy transition, and the impact that we've seen on energy demand this year. So maybe Peter, if you want to kick us off there.
Sure. Well, I guess just broadly, I can talk about the basics of what we know has happened so far this year. So obviously there's been a pretty significant impact on energy consumption and mainly on consumption of fossil fuels, so oil, gas and coal. So estimates are that year on year oil consumption could fall by as much as 7 or 8% in 2020. And the fall in coal consumption could be in that range as well. Natural gas, probably also a year on year fall, but not nearly as severe. So why oil and coal have suffered so more than gas? Well, generally, obviously, there's the impact on transport. There's very limited air travel. There's been lockdowns, restrictions on travel in a whole range of countries, and they seem to be reoccurring throughout the year. So less people are moving around by road and air, of course. So there's been a huge impact on demand, mainly for oil in the transport sector. In some countries, that looks like it has recovered. In some countries in Asia, there hasn't been quite the recovery back to year-ago levels in the US in terms of oil demand, although there's been a partial recovery since the middle of this year. And also with coal, why coal? Well, basically, there's been a significant slump in electricity consumption, and coal seems to have borne the brunt of that, especially in the US and the EU, where year-on-year coal consumption is about 30% below what it was compared to 2019. Interestingly, there was a lot of talk about how this would affect renewables. So far, it seems to be not nearly as bad or even modestly positive. If you look at generation of renewables of solar and wind, it's actually increased year-on-year in most major markets, Europe, US, also in India and China, actually. So it seems to have weathered the storm and been a bit more resilient, and there's a whole range of factors for that. Mainly, it's been taking up the slack that's been left by coal in many markets. It's benefited by the continued capacity growth this year, so there's more projects coming online. And also in some markets, renewables have priority on the grid. It's also benefited from things such as the reformed emissions trading scheme in the EU. However, on the more negative side for renewables, the capacity growth this year will probably be slower compared to 2019. And there's also some question marks over what the future of investment is. Longer term, I guess, in terms of energy consumption, there's three things to look at. What will be the longer term impact of global GDP of the coronavirus? So will the global economy recover next year? Will this coronavirus get under control? We just have to wait and see. But assuming there is a resumption of GDP growth next year, we would assume that energy consumption will bounce back, but not as strongly as what it's fallen by in 2020. But we just have to track how will this affect longer term GDP growth in the longer term. Also, how will it affect behavioural patterns? Will more people stay working at home? Will people not do nearly as much air travel as they used to? What will be the impact on public transport? So there's behavioural patterns we need to be tracking over the next couple of years and how that will change over the longer term. And then the other factor is, what are the policy responses? Are all governments around the world using this as an opportunity to bring about, a green-led economic recovery and to meeting the Paris Climate Agreement's goals for limiting the global average temperature increase to less than 2 degrees. Once again, that's pretty mixed. the EU seems to be more advanced in that. In China, their economic recovery plan actually has been very fossil fuel intensive, but then you had this interesting statement last week about China deciding to, or pledging to be carbon neutral by 2060. And the US, of course, will depend on what happens in about a month's time, who will be the president in 2021 onwards, because there'll be very different climate policies in that case.
Yeah, absolutely. Felix, what have you seen so far?
I think Peter has been giving quite a very comprehensive view of what's really happening in the market. I think for me, what I can add on that is the transitions of energy from basically fossil fuels or carbon intensive to more renewables and energy conservations. I think so far, what we have seen this year is quite interesting on the renewable side. As Peter's mentioned, there isn't really a setback in terms of the investment or the sentiments of the investors towards renewable, which is very different from, I would say, 2008, when the GFC hit us, and also following that the European debt crisis as well. By those times, and especially in those times when we see oil prices collapsing, there has been a lot of negatives about renewables, saying that, okay, it's the end of it, or something going to the extreme, saying that the renewables is not working. But so far, I think good things to see is we have the European governments very supportive on the developments of the renewables. As more important, we have the capital markets on the investor side, I think, driven obviously by the green sentiments, as well as the ESG whole ESG investment thesis, which is driving down the investments, and as well as the driving up the capital costs of doing the fossil fuel projects as well as the coal projects. That's why I think renewable actually, in my view, is actually benefiting because of the more awareness after the pandemic on ESG and sustainability. So I think this year, from my understanding from some of these biggest non-private renewable energy developers, their project actually has been still progressing. It's just that the constructions and some of the works of verifying these projects because of the COVID and the restrictions on travel has been slowing down. But the pace of the investment capital actually is not really slowing. In fact, we have seen Australian government has been trying to push quite a lot of the projects in whether it's wind or solar, particularly on the Stratus Seas, about the building a transmission line between Tasmania and the main island. All this seems to be maybe because of COVID. They're trying to speed up the green recovery. So I think it's actually overall has been doing good rather than doing bad for renewables. And back to the fossil fuels, I think one thing that is interesting is to see the OPEC as trying to control the supply, and that has positive impacts on prices. But at the same time, we are seeing the energy demand recovery has been relatively slow. And there has been arguments that whether the energy recovery could be actually going back to the pre-pandemic levels. In my view, I think it will be there probably by next year, but it's just that the prices may not be back there by then because of what we are seeing in the pro-investments of green and the anti-investments of not green. So I think this is what I'm seeing at the moment. And in terms of how much energy has been declined, I think I quite agree with what you and Pat has been saying. It will, in our view, globally, it will be somewhere between like 5 to 6% in terms of the oil demand decline this year. And for coal, is the seaborne markets are always telling you that prices are not favoring, and the import space, the seaborne demand actually is also coming down. I think one thing's interesting to look at in the longer term is how China positions about coal and fossil fuel, because coal is still pretty much the bread and butter for the power supply on China, and I don't think that it's going to change in the very near term. But obviously, because of the statements from China of the pledging on carbon neutrality by 2060, there will be interesting policy to watch on what is going to come out on the 14th five-year plan, which will be probably coming out some of the details over the next 6 to 9 months.
Absolutely. I mean, you've touched a little bit about some of the policy responses that have come out for stimulus recovery from COVID. Has China mentioned, what has China kind of put out in terms of their plans? And does that include kind of a green focus beyond kind of broad plan for 2060?
I think generally because of the earlier control of the crisis in China, so things has been moving actually ahead of the rest of the world in that sense. So the recovery so far, I think, is still more on I would say still pretty much on a more sustainable way. Maybe renewable energy, which is what they have been proposing, still going on. There's not cutting back on it. What is positive, I think, is on the tech side, the technology side. They have been trying to speed up the development of 5G and to try to further upgrade the whole industrial production supply chain to be more, higher tech, adaptive. So I think in general, the energy intensive things which we are seeing is like, for example, big infrastructure project is something which we are being less discussed. It doesn't mean that infrastructure is going to slow down. It's just that the driver of the recoveries and the economy going forward will be more on the less energy intensive focus.
And so we've also touched a little bit so far on oil prices and kind of what's happening there. So have you seen an impact from oil prices on renewables? Peter, maybe you want to jump in here?
Yeah, that's an interesting question. And there's always an assumption that when oil prices collapse, it's really bad for renewables. It's interesting that when we had the oil price collapse last time in 2014, when oil was at $100 a barrel for 3 consecutive years, and then you had a significant collapse in oil prices down to the low 20s at one stage. And then has been creeping up until this latest collapse. But if you look at the deployment of solar and wind over the last 5 years, it doesn't seem to have been affected by oil price volatility. I mean, for a start, oil is mainly for the transport sector. Renewables competes, it's more of a direct competitor with gas and coal in the power sector. Also, another factor to look at is when oil prices fall or go up and down, it's not as if other things remain constant. So you still have policy drivers of countries, of renewable targets or carbon pricing, which still helps renewables. You'll also have the continued fall in costs of deployment of solar and wind. So basically, solar and wind seem to have weathered the last oil price collapse fairly well. It's now much more entrenched in the power systems of many major markets around the world. And a lot of these policy drivers are still in place. So I don't think that cheap oil prices necessarily means gloom and doom for renewables. In fact, if anything, if you look at generation of renewables, it has actually increased year on year. And I think as long as costs keep falling, there's still the policy drivers in place, and renewables are no longer a marginal alternative than perhaps it was a decade ago. I mean, now it's reaching significant shares of power generation in lots of countries in Europe, for example, that would still continue.
Yeah, absolutely. Felix, do you have any thoughts on oil, or should we continue on?
I think for oil, I think Peter has been pointing out something which I have been highlighted in my previous reports about when people try to say low oil price is equals to be disincentivize renewable, which is I would say it's totally the wrong concept. I mean, oil, a major use of it is based on transport, which is about 70% of what the crude oil has been used in. And that is not really a direct competitor of renewable, which is basically electrifying vehicles and our day-to-day power usage. So I think despite the fact that there's no direct linkage, obviously we can calculate, people like to calculate how much like per energy unit of prices of oil equivalent to power, which is one way to do it. But I think the message is that I think with the electric vehicles getting much more popular right now, and a lot of countries are basically in Europe are trying to do it, phasing out all the ICE, the traditional combustion engine by 2030 or 2035, depends on which country we're talking about. And even recently, California have been saying that there will be a ban of ICE by 2035. So I think the overall trend is we're going to get a lot more electrified land transportations compared to the past. And that is why we think that we need a lot of power. And where's this power coming from? It will not be coming from oil or diesel. It will be coming from renewables. So for oil prices, because of the transitions of we are seeing, I think it's very, in my view, is I take a generally cautious view on the longer term outlook of oil price. It doesn't mean that oil price is going to stay here forever. We do have a forecasting that prices is going to be hovering between about 45 to 50 in a more balanced status over the medium term to incentivize more production of it, because at the end of the day, we still need oil for some times. We don't see the scenario where oil will be disappeared in the usage. So when oil prices will probably recover a bit from what we are seeing, if assuming that the COVID situations get even more contained and international transport get to resume rapidly, then oil prices is going to go back up. But how far can oil prices go? I don't have my impressions and my expectation is it's not going to go back to the $100 level, which some probably very bullish on oil we're expecting. We are seeing probably 50 or back to 60 for the Brent crude in the medium term.
Absolutely. And I guess moving on from oil, what is your general outlook for thermal coal? So does it still play into, how much is it still playing into the discussion on energy? Peter, maybe you want to take this?
Sure. Well, I guess it's coal has definitely struggled this year. I think, as I mentioned before, year on year in the first half of 2020, it's fallen about 30% in key markets like in the US and in the EU. In China, it seems to have recovered. So the latest data from the National Bureau of Statistics show that thermal power generation, which includes gas and oil, as well as coal, but in China, it's the vast majority of thermal power generation is coal. It seems to have recovered, and now it's only about 1.5% below the first half of 2019. So there's been some recovery there. In India, it's still down year on year. So I think there's probably three different trends that I see. I think definitely coal is in structural decline in most OECD economies, North America and Europe with coal phase outs, and even countries like Poland now cutting their targets for how much they want coal to account for their share of power supply. Germany will phase out coal by 2038. That might happen even sooner. So we definitely see coal in structural decline in most rich world economies. In China, it's interesting, it's sort of in a holding pattern where the rate of growth is nothing like it was in the previous decade. It actually shows, total consumption shows a bit of a plateau over the last half decade or so. So I think China, in terms of policy, especially in the light of what was announced last week, is kind of poised to, at least at best, in terms of coal demand, show not too much growth in the future. And it could even, peak within the next decade if this target to have emissions peak before 2030 eventuate. So we just have to see what the policy outcomes will be there of China's 5-year plan, which will be known at the start of next year. However, for the rest of Asia, we still see fairly strong growth in many key markets such as Vietnam and the Philippines and so forth. But even there, I see some policy changes. Like Vietnam added 5 gigawatts of solar power last year. It's got a very ambitious target for offshore wind. So we just have to see what happens there. But I see 3 different tracks of decline, a holding pattern, and growth, depending on where we're talking about.
Absolutely. And Felix, I don't know if you want to give your kind of general outlook on coal, maybe talking a little bit also about, there's been a lot of companies and countries divesting of kind of either their resources of coal or just their use of coal, and the impacts there on capital raising, the financial side of things.
Sure. I think in terms of the outlook for coal, I basically seeing the structural decline as what we just mentioned. I mean, this is probably a consensus view, and I'm sticking with that. And it's very hard to change given the overall the climate change agenda globally. And even China, last week's statement is also giving the markets a wake-up call about what's really happening in the world. And for China, I think the coal demand and supply is going to be in relatively balanced situations, but we're going to see a lot optimizations about the industry with larger scale, relatively cleaner coal, better organized mines, probably going to be surviving, and some of the smaller mines is going to continue to face pressure on closure, especially when the resources depleted. So it's a natural developments on the coal in China. I think the questions goes outside of China will be probably India and a lot of the Southeast Asian countries, how it's going to deploy the energy policy going forward. But in general, I think the greener trend is not going to change. So I think the structural decline of coal is almost like to me, it's more like a certain things. And for that also comes to the why some of the companies are basically selling down their coal assets or divestments or trying to spin it off. Apart from the actual industry structural downtrend, which is going to be slow anyway, is the capital markets on demand on investors being more responsible on their portfolio. So we call the ESG the score, what they call it, and sustainability ratings of your portfolio. So it goes back to the asset owners, like the pension funds in the Europe and in Japan, and even in some of the biggest asset owners in the US are also trying to decarbonize their portfolio. That is also why some of these resources companies trying to spin off or even just sell off the coal assets so that it's not appearing on their listed company vehicles. So I think this trend is going to just continue. I think the issue is where you're going to find those buyers of the coal asset when they're going to try to sell. I think what could happen is you probably see some of the private equities coming out and to snap up some of these assets, taking off the balance sheets because they have probably a more special vehicles to take care of those assets. And at the end of the day, the energy transition is going to take quite a while, and coal will not disappear. So you'll probably earn a reasonable income and cash flow from holding these coal generating assets.
Absolutely. And we've talked a little bit about trends globally towards decarbonization, stimulus measures and stuff coming out of COVID. There's definitely kind of a difference between different parts in the world of kind of prioritizing decarbonization. How much is Asia Pacific kind of taking this on with different measures of policy response and just general attitudes? Is APAC growing in their awareness, and prioritization here? Peter?
Yeah, well, I guess just to cite some recent examples of where there has been a change, like I mentioned Vietnam before, with the big build out of solar, and now they're looking at offshore wind. So that's a definite change. And there are also countries like Vietnam downgrading how much additional coal capacity they thought they would need for different reasons. Maybe their original forecasts of electricity consumption growth were a bit too optimistic. So Indonesia did that recently as well. And also, if you look at a country like South Korea, which back in April pledged carbon neutrality by 2050, it released a draft energy plan in May that will basically cut its coal capacity in half by 2034, and to pledge billions of dollars in investment to boost renewables capacity. So in different parts of the region, I do see some shifts, and I do expect that to continue, but there are some barriers and there's still a long way to go.
Felix?
I think for the trends that I'm seeing right now is that for Asia has been generally, I would say, doing a catch up in terms of going for decarbonizations. And it's good that we have seen China pledging the carbon neutrality, because this is quite important steps for the regions, not just globally. I mean, it was going to push, I think, more. What is going to follow up is what kind of policies we are going to see from this. And I think carbon pricing is going to, and carbon trading is going to be something that in this part of the region is going to be looking more interesting from a policy standpoint. Generally, I think the Asian part of the world, in terms of decarbonization, is pretty much driven by the governments. It's more from the public sector driving the private sector, which is quite different from what the US and to some extent, to also great extent, is what the Europe has been doing, which is mainly is more interactions between the two private and public. In here, it's more from the governments, which is basic policy driven, and I think that is mainly because of generally more conservative business environment in this part of the regions. But we're catching up, so I think it's going to change. And going to the future, what we are seeing, I think, is from a capital market perspective, we are likely to see a global trend of the board of directors taking more responsibilities on climate issues and the environmental and ESG issues in general. And so it's going to take up from just taking, I mean, rather than just choosing assets to invest, it will be more taking the whole picture, integrating the carbon issue with the whole strategies of particularly on listed companies. And that is going to be a game changer going for the next probably 5-10 years. And so climate change governance will be a key thing driving the whole pictures.
Absolutely. And Peter, I don't know if you want to close us off with any final thoughts on kind of where you see this decarbonization trend heading, or?
Just quickly, I think 2021 will be quite interesting, pending the result of the US election in early November. And also, I think we'll get an early indication of how serious China is in its emissions peak pledge before 2030 and the carbon neutrality by 2060 in the release of the details of the energy parts of its next 5-year plan. And also how the EU will go with its carbon neutrality goals and also raising its climate targets for 2030. So there's 3 interesting things to watch next year in terms of progress on that front.
Absolutely. Great. Okay, so that just about closes us off for the decarbonization panel. I want to thank both of our panelists today for joining One-to-One Mining Investment APAC Online, and we look forward to seeing you all again in person soon.